In this video, I wanted to talk about the 1 hour chart and how I used it today to enter 2 trades using a very simple strategy that is easy to just rinse and repeat. So let's just get straight into the video. So for those of you who don't know, I like to use 2 time frames when I'm trading. I like to use the hourly and the 1 minute. The hourly is for the directional bias and then the 1 minute is for entries. Now there is a certain pattern that I'm looking for on the 1 minute. However, the trades that I took today were predominantly focused on the 1 hour chart. We still entered based off the 1 minute, but the main theory behind the trade was the 1 hour chart. So when I'm looking to take a trade, I look at the 1 hour candles and I'm taking a trade based on them. So if an hourly candle closes bullish, I will be looking to buy when the new hourly candle opens. And then if an hourly candle closes bearish, I will be looking to sell. Now I do consider the 1 hour structure and I'm looking for areas of support or resistance using the 1 hour chart. For instance, if we're pushing bullish into an area where we've rejected from previously, I won't be looking to take that trade. Same again with sells. So if we can mark out an area on the 1 hour chart where price is pushed into previously and rejected, I won't be looking for a continuation to sell when we get back to that area. So let's get into the trades that I took today. So if we look here on the hourly chart, we can see that we clearly have this area where price is rejected from previously. I mean, we can go back to last Monday on this one and we can see how many times price is pushed into here and rejected. So when we come into this area again, there's a chance, obviously it's not going to happen all the time, but there's a chance that because we've rejected from there before, we can reject from there again. So with this one, the previous hourly candle is bearish, and as I say, I'll look at the previous hourly candle and make a decision based on that. Now this is more of an indecision candle. We can see that it's only a very small body on this candle. So from 12 till 1, price opened here, tried to push up initially, failed, then came down, tried to push further down, then failed. Now obviously it's not necessarily a good sign that we see a bottom wick on this candle, and it is quite a small body. However, the reason behind this trade was simply because I've seen what price has done here previously on the hourly chart. It's pushed into this area and it's rejected multiple times before. So because of that, I was just looking for a sell. So the new hourly candle that we're trading opens here, so 1 o'clock. This is where that candle opens. We've seen that we've closed bearish previously, not an ideal candle, but we have closed bearish. So from that, we can take a sell based off price pushing into this area. What I want to see is I want to see price try to push up, giving buyers an opportunity to push the candle as high as they can before potentially failing and then price reversing back into our direction. So we're looking to take a sell based off the previous hourly candle. So if the previous hourly candle is bearish, we're looking for sells. If it's bullish, we're looking for buys. Now the fact that we've pushed into this area previously does help with the confluence that potentially price may go down. We have closed bearish, we're into this area. It makes sense that price might go down. Obviously, price is going to do what it's going to do. We'd never know what's going to happen. But ultimately, I was happy to take this trade after we've tried to push up. So we've got this top wick here on the hourly candle. We can see that there. So price opens here, tries to push up. It's now failing to break this high. It's pushing into an area of rejection. Now, the only reason I'm not that keen on this entry is because when I see that lower high shift, what I'm looking for ideally is I want to see a lower high get created close to the previous high. So higher highs and higher lows, we've made this high here. Now, if we can come down to make a low, come back up to make a lower high, and it's a close shift before breaking that low, that is what I prefer to see. So the entry on this isn't something that I'd take a lot of the time. It's more because of how the hourly candle is closed. That is why I did take this trade. Now we can see that this new lower high isn't close to this high. However, because of the hourly chart, I was still happy to take this. And what I want to see is I want to see the current hourly candle be in our direction for us to take that trade. It just adds extra confluence that I like to see. So I can't take a sell until the current hourly candle that we are trading is bearish. Now we can see that price opens here and has pushed up, tried to push up further. It's now here, so we are still bullish on this current hourly candle. So I wasn't able to take a sell unless the current hourly candle flips into our direction, which you can see if we can break this low, the current hourly candle will be bearish at the time. So if I mark out this low here, so price has pushed up, made this high, come down to make a low, come up to make a lower high. You can see that on the line chart a little bit easier. And then if we can break below this low, I do see that as a sell opportunity. So even though we are far away from this high, I did still think it was a valid trade. So I took the trade when we broke below that low. So that is my entry on this trade. And we can see what happens is, if we skip forward a little bit, price stopped us out. That's going to happen. It's fine. We just move on. We take the lesson. We think maybe next time we won't be entering so far away from this high. But at the time, I thought it was a valid trade, so I took it. And then we can see what happens is, price does push into this area again. We actually potentially get a second entry here. So price has pushed up. It's now made a much nicer pattern. So we've pushed up higher highs and higher lows. So there's that bullish momentum again. So buyers are still into this candle. They start pushing price back up. We then make a high, which is here. And then the shift on this one is a lot closer to the previous high. So this was a much nicer trade. However, my rules are I don't enter more than one trade during the current hourly candle. So I had to sit this one out. But we can see what happens here, that price, when it breaks this low, it will be bearish at the time. And then price does break the low. And then that one would have actually worked out because I was keeping my eye on that. But I thought, it is what it is. I've lost the trade. Let's move on. So I couldn't take another trade during that hour. So if I go to the next trade there, I was just hoping that potentially price wouldn't close too bearish. So what I didn't want to see is I didn't want to see price come back down to the bottom of this range that we're trapped in on the hourly chart. So here's the high. This is where we took the sell because of this high. And I can see that price could potentially go down to these wick rejections. So we've got plenty of room to come all the way back down here. So I just didn't want to see this bearish candle look like this one. So even though price does continue down on this candle, I don't like how big that candle is. It means there's been a lot of selling pressure for an hour. I don't like getting in when potentially I've missed the boat. So the fact that we do actually close with quite a small candle just means that there's still opportunity to get into a sell. I feel like there's a lot more selling momentum to come with these candles. We've not missed too much during that hourly candle. So I was happy to take a sell here. So this was the 1 till 2 candle. That is where I wanted to get in ideally. I just took the losing trade and then missed the second entry. Well, I didn't miss it. I didn't take it because it's not part of the rules. But ideally, I do like to be part of those first hourly candles after we have this bearish candle, when price is more likely to go down. However, this candle isn't too big. We've got a nice top wick rejection here. So when the new hourly candle opens, the 2 till 3, which is there, I can be looking for a sell. Again, price does what we want it to do. We can see that we do start getting higher highs, higher lows, giving buyers an opportunity to push price up. If they're unable to push price further, we can look for a sell. Now, with this one, from a 1 minute perspective, I wasn't able to get into the trade where I would have preferred simply because it didn't follow the rules. So if we look here, the first shift of bullish momentum into bearish is actually from here to here. We have higher highs, higher lows. We make this high here. Price comes down to make a new higher low, and then instead of continuing up, we actually shift and get a new lower high. Now this shift is really close to the high, so we could have had a nice tight stop with this one. If we look from the line chart, we can see that there. There's the high, here's the low, there's the lower high. So I was looking to ideally get into the trade there. And the only reason I couldn't take this trade is, if we look, by the time we break below this level, which is this candle, we are still bullish on the hourly chart. So we can see the price opens here, tries to push up, creates that top wick. It then pushes further down. Now, by the time we're looking to enter this trade, which would have been the break of this low, we are still green. So that trade didn't follow my rules. So I didn't take that one. Now, what I was waiting for is I was still waiting for a potential entry because I was confident that price is going to go down after rejecting from this area multiple times. We've got a bearish candle. I just thought it made so much sense to go down. Obviously, trading doesn't always make sense. Price does what it wants, but it just felt right that price may go down. So I was still looking to get into an entry with this one. Now, this is much more of an hourly trade rather than the 1 minute, because the structure on the 1 minute doesn't make too much sense, because we start to get the higher highs and higher lows. We get that shift. That's an ideal trade when we break this low. There's just no entry because of the bullish candle. Then after we make this low, price actually violates this lower high because we have a body that closes above the lower high shift. So once we make a lower high, if we're looking to get into a trade, we want to see the lower high be respected. Now we can have wicks that close above the shift because that's where price has tried to push up and failed. So if anything, that's just more confluence that this lower high is being respected. We're unable to break it. However, once we get a body that closes above the lower high, it just means that potentially the lower high shift is now failing because we are starting to push bullish again. So we have this bullish candle here that closes above the lower high shift. So that's another reason why that shift was invalidated. And then after that, price starts to move sideways. It pushes down, but then instantly pushes back up with two bullish candles. It's really not an ideal setup from a 1 minute point of view. Now, if I would have got this price action on the 1 minute on, let's say these bearish candles here or this candle here, I wouldn't be looking to take a sell because it's just too messy. What I want to see is price clearly making higher highs, higher lows, and then that first shift where we're unable to violate this high and we make a lower high and then break the low. They're the trades that I like to get in. I don't like it when price isn't clear, when it starts to move sideways and just looks a bit odd. So from a 1 minute perspective, this is not an ideal trade. This is why this video is about the hourly chart, because this trade was purely taken on the hourly chart. I was still confident that price is going to go down simply because this area of rejection and this bearish candle from here. So even though we don't get the setup that we want to see on the 1 minute, I was still happy to take this trade, and we didn't really get much bullish price action to work with. But what I did see is, now this looks a bit different on Tradezella than it does on TradingView, because if we look on TradingView here, which is what I was using, we do have a lower high. So we've not really got much bullish price action. It's not the first shift, but we do have this lower high here. Now it looks more of a double top on Tradezella, but when we look on TradingView, we can see that this high is clearly lower than this one. So we've got the bodies of these candles closing lower than this previous high. So I did see that as a lower high shift, and ultimately, like I say, the trade was based off the 1 hour as opposed to the 1 minute. I was still looking for the patterns that I like to see. There's just not too much bullish price action before this lower high shift. But from an hourly perspective, I was happy to take this trade because once we break this low, we can see that we are bearish on the current hourly candle that we're trading, which is another important rule for me. So we'll put a stop loss above this previous high. And then we did go for a 1 to 2 target on this. So it was triggered in, and then price starts pushing down. And then ultimately we got there and we did get the 1 to 2 on that. So from a 1 minute perspective, really not ideal, but hopefully you can see why I still took this trade, even though it's not an ideal setup on the 1 minute. Now, if we look at the rules, I'm not going to be able to tick all of them. So the previous 1 hour for direction, 1 minute for execution, yes. Current 1 hour in line with the previous 1 hour, yes. First shift, it wasn't. We can't say that it was the first shift because the first shift was further up. It was just not valid because of the current hourly candle not being in our direction. It also wasn't necessarily a clean shift. I mean, there's no shift from bullish price action to bearish. Price action, if anything, is just moving a little bit sideways, acting a bit weird. Not really what we want to see. However, the entry was close to the flip, so we can take that. So just as price starts pushing bearish is when we got into this trade, because from an hourly perspective, if we look at the average range of these candles, we've got plenty of room if we've just started pushing bearish to continue down. So it was close to the flip, which is important, and it's 2 trades per session because this was the second trade of New York. Minimum 2.5 pip stop loss and a maximum of 10. And then the exit criteria was a 2R. So 6 out of 7 rules followed on this trade. So if we have a look at what it means for the FundedNext challenge that we're currently doing, we are up 2.42% as our account balance is now at $5,121. We've traded for 3 days now. Our max daily loss limit is 200 and daily loss till now is 0. Our max overall loss is 400 and we're on 0 because the account hasn't been in drawdown since we started trading it. Minimum of 5 trading days, we've traded for 3. Profit target of 400 and we are up $121 so far on this challenge. If we look at the trading overview, we can see we've taken a total of 5.44 lots. I am just risking 1% per trade. Our worst trade is minus $45, which was the sell that we got into first. Our win rate is 66.67. loss rate of 33.33. And then the best trade being $94, which was the trade that we took today. So hopefully we can keep this momentum going. Tomorrow's a new day. We will see if there's any opportunities. If you have any questions at all, please let me know in the comments. And thanks very much for watching.